You want to get into real estate, but you don't know where to start. Well, 2023 is going to be your year because the market is leveling out. We've seen the craziness over the last 2 years, the bidding wars, overpaying on property, difficulty getting financing, your dollar not going as far because these properties are just insanely overpriced. We're not going to be seeing that in 2023. So your average person is going to be able to start investing if you haven't already. Okay, so first thing you want to do is you want to establish a goal and decide what type of real estate investing that you want to do. So when I talk to people and kind of cater an investment strategy specific for them, to me it all comes down to age, because if you're young, you have decades ahead of you to steadily pay off a property, kind of learn the industry, you could be more aggressive and take higher risks, because almost any mistake in real estate can be fixed with time. So if you have a bad buy, you just hold it out. You just hold longer and things tend to correct themselves. But if you're a little bit older, then you can't take those risks, because the whole point of real estate investing is to have passive income so you can retire, enjoy your life, spend time with your family. And if you're older, you don't really have, 30 years to wait for a property to pay itself off. So that could look like a couple different things: a bigger down payment or a lower price property, or just investing in something like a REIT where there's already a company that holds the property and you're just buying shares and we can go through all the different types of investment strategies next. It's all gonna come down to what your goals are. So let's go through the different types of investing that are accessible to pretty much everybody. We're gonna start with the best first. This is the investment strategy that I chose, which is rental properties. I am young. I have most of my properties on 30-year mortgages, but I do have quite a few on 15-year mortgages as well, because I already have a job during the day. I'm a real estate broker. I don't need $1,000 or $2,000 or a couple $100 a month that the properties generate. I don't live off of that income. So most of the income that the properties make, it just goes back into the principal and they just sit there paying themselves off. Of course, over the last couple of years, I've done some aggressive things like the BRRRR, where I had some properties paid off, some properties close to being paid off, and then I refied, pulled cash out, bought more money. That's a video for another time, and the internet is full of information on how to do your first BRRRR, or just how to build a real estate portfolio with other people's money. Video for another time. This is kind of an intro 101. But rental properties are great because all you have to do is really get a down payment, buy a property, put tenants into the property, and then they pay your mortgage slowly over the course of 15, 30, whatever kind of loan program that you're on. So that's option number one. Option number two, so for some reason you can't qualify for a loan, or you can't save a down payment, or you just don't want to start with couple $100,000 purchase, you can always go to something called a REIT, a real estate investment trust. I kind of mentioned this a little bit earlier. So a REIT is publicly traded on the stock market. So it's a company that owns, you'll see those big buildings in downtown or big complexes. What you do is you could start with very little money. You could start with a few $100, depending on how much the share costs in a specific REIT. You're not actually putting your name on title, you're not taking any risk really. You just buy shares in a company that owns, and then REITs, I believe, have to pay shareholders the majority of the income, which is about 90%. It all comes back to you, and not just that, but the buildings are steadily appreciating. So if you just keep investing monthly into a REIT and kind of just forget about it, after a couple of decades, you've generated passive income, and the properties that the portfolio holds are appreciating. So like I had mentioned before, time is the most profitable way to make money in real estate. The longer you stay in, the more money you make. Now, of course, there's short period of time in real estate, which is kind of like a fix and flip, or the longer you stay in, the longer it takes you to remodel, the longer you have holding costs or hard money loans, the more money you lose. So that is number three. Fix and flips are great when the market is going up. When there's an uphill trajectory, and you can kind of tell, because over the course of, and what we've seen is since 2013 over in the Pacific Northwest, that's the market that I'm in, but we've seen the market going up. Every year you try to buy property and it's getting more and more expensive. That means the market's appreciating. Fix and flip is great on an uphill, but it's very high risk, which of course comes with high reward, but you're at the mercy of what the market does. My investment strategy, the buy and hold, I don't care what the market does because I'm not selling. I bought a property and I plan on holding it for 30, 40, 50 years and just getting monthly income even after it's paid off, and then eventually maybe even leaving it to my kids. I do not intend on selling unless, you know, there's different circumstances. You 1031 into a bigger property, or you have a property that either is coming up on high ticket items that need repairs, or it's just a huge headache, and that could be a video for another time. But I've never done the fix and flip because the market is so volatile on a short term. And now with 2023, I don't foresee a crazy uphill trajectory like a big bubble that we've seen over the last 6-7 years. If you are not using your own money, but you're using hard money from other investors or loan sharks, or who knows where the money is coming from, then it's going to be very high risk. And the most people that lose money in real estate or panic when there's a downhill are people that are on a short term, or they're not using their own money. So flippers have to buy a property, make capital improvements with cash, and then hope that when they go to sell 3 months later, that the market has done well and that they're not going to lose money. And not just that, but to me, fix and flip feels like a paycheck, like you have a job. But buy and hold long term, it's passive income. It feels like you're not really working because the properties are, if you have a management company, or if you know how to screen your tenants, it could be extremely passive. You just have to get involved, you know, once a year, once every couple of years when there's a turnover. And I can make a video another time about how to have tenant retention and make it super passive, because I manage my own properties as well. So I've kind of mastered the do not call me and making it as passive as possible. So that's number 3. There's a ton of other ways, and without, you know, giving you 20 different options, there's a lot of great resources on the internet. The next one would be the last one, number 4, buying using other people's money, or just getting a bunch of people together that have money, and buying properties together, like partnerships, or syndications. But my experience, I've done a partnership once or twice. It's not my favorite because you're either dealing with people that are more experienced than you and they're taking advantage of you, or less experienced than you and they make bad decisions. So like I had mentioned before, my best investment strategy is buy and hold. I've had experiences with other people where if something happens in life, like I don't know, like a car accident or a tragedy or something, first thing people want to do is sell the property, cash out, make money. But the thing is, the longer you hold, the more money you make. And if people are always trying to sell or liquidate or move the money, and they're less experienced, they're going to make bad decisions, or they panic sell. Like 2023, the market's not as strong as it's been the last 2 years, and a lot of people, and I've seen properties on the market, people are panic selling. It's like, why? Just hold, make money. It's paying itself off. The market is cyclical. It's going to go up and then it's going to go down. And if you just know, hey, we're in a downhill, but you know, and my next cycle could be 8 years from now, 10 years from now, prices are going to go back up. There's no reason to be fearful of the market. You just hold and weather the storm. And like I was mentioning about age earlier, if you're young, more often you just go back to work. So keep a day job, have the properties at least be able to pay themselves off without taking a profit. And if they go under a little bit, if you have to come out of pocket $100 or $200 a month to keep millions of dollars in real estate invested, that is extremely worth it to me, and that makes complete sense. So partnerships can be a little scary if you're not on equal level with your partners. So just be very, very selective with your partners, and everybody has different goals in life. So you're not just trying to figure out your path, but like I said, you're at the mercy of somebody else's path as well. So that could be a little bit of high risk, but also again, high risk, high reward. You could go buy properties with other people's money and come together and grow a lot faster than you would by yourself. That was just a brief introduction video on different types of real estate investing. Like I said, there are a million more, and one size does not fit all. So just figure out what works best for you. And remember, the goal is financial freedom. So whatever gets you there faster. Thanks for watching.